Hey guys, how you doing? This is GM Trader for another video. I decided to make this video because of a question made by a valuable member of the group about how I came up with the idea of shorting Bitcoin today. I made a big thread while I was trading because today I was there during the New York session and I decided to trade. Been doing day trading basically, which is buying and selling during the same day. So we're not talking about holding a position, buying spot and selling like a month later. This is day trading. It's not for everybody. So the people that are interested in this, I think it's actually very interesting for everybody because that's very instructive. And what happens in day trading happens also on the monthly chart, on the weekly chart, on the daily chart, and it's always good to see how I came up with the bias basically with my biases and how you can change that during the day. You have to be flexible. You just like should never be like 100% oh I'm bullish, 100% I'm bearish. You have to be flexible and see what the market is showing you and be ready to change your bias. Okay, so here I got on the left side the thread that I was the thing that I was publishing in the day trading setups group channel, and on the right I've got I'm going to use a replayer tool on Bitcoin to try to walk you through how I was thinking, how I was viewing the thing at the time live. So that's a replayer tool that you can find on TradingView to go back in time. We are here on Bitcoin. This is just like the silver, this orange line, and the purple thing that you can see here. That's just a visual help for me. That's something I made for myself. Yeah, I think it's based on an indicator on TradingView, a free indicator, but I changed it so it fits my, the way I see things better. This is just to highlight when the New York session starts. Okay, so this is a concept we have not talked about yet for sure, but and I'll be making more videos towards that later on. But in Bitcoin and basically in every single market, there are moments in time during the day when there is a lot more volume coming on, and it corresponds with when the traders, the big institutions, are focused on trading, okay, and many other players, big players. The New York session starts usually at 8:30 New York time, so you can see here. So that's 8:30, the start of the purple zone. At 9:30, this orange line, it's for me to remember that it's the stock market opens. It's always very usually when the stock market opens, you always have a lot of volatile play, a lot of money coming in, and you have a price goes up, price goes down like very quickly, and the silver area there is between 10 and 11 New York time, and I believe this is usually the best time to catch some trades. Very volatile as well. You make often intraday. You can make the high or the low of the day, and that's the silver zone in the afternoon between 2 and 3. Also, we can have some good action. And this zone there is just like lunchtime. Usually the price does nothing, or price retraces and for the next leg of a move, or price goes sideways because people are just at lunch. Okay, so let's start. I started the day being bullish, like I put it in the group there, because I believed that one of my favorite fingerprint left by the algorithm was present on many coins. So I'll take this is not showing yet on Bitcoin, so I'll go there on Sol. So what I like, this fingerprint is called the equal highs, relative equal highs. So basically what happens is, as you can see here, the algorithm, which basically runs the markets really, forces the price into a level that you can see like 227.50, and every time it hits this, it goes back down, you see, and it creates some equal highs or double tops. The price reached 227.50, dumps, reaches 227.50, dumps, and we had it a third time at 7:30 here, 7:30 and an 8 as well on Sol. I love to see that, because usually when you have double or triple highs, a lot of retail traders, they'll just think, oh wow, it's a big resistance, the price just cannot get over this, so I'm going to put my stop loss here. And on the contrary, the market, what it will do is just like go over this price on purpose to trigger the stop losses. So if you guys don't understand what I'm talking about, like stop loss and stuff like this, you should download the PDF that I just made for the trading basics in the group. So please do that, and you will understand a little bit better what I'm talking about. And so I was saying the price would love to go over those levels just to stop everybody, because they'll put their stop losses here. So if someone is going short, selling, and he puts his stop loss there, once the price goes over, it will automatically close his short position by buying. And the big traders, because they want to fill big positions, they want people to get stopped. So a lot of buys are triggered automatically, and they can match those buys with their sells. So they'll be selling massively here when everybody is stopped, and then the price collapses. Okay. So I was bullish simply because I was really hoping to see the price come back and take those highs. So we had this on Sol, like I was saying. We also had it on Algo, for example. You see again, double top. Okay. That was yesterday, and then today at 7 we were approximately at the same level as well. So that was the first warning, actually, because at 7 on Algo we went past it. So that was a warning for me, because I'm like, oh, if they already taken the liquidity, basically the stop losses, I don't have a target anymore to go long, to go for a buy. So anyway, let's go to Bitcoin now. I don't want the video to be too long, obviously, but I needed to explain why I was bullish. So Bitcoin was doing the same type of things. I'll put play on the replayer. So you'll see like here, like just when we started the New York session, you see, I want to show you that the price made the same thing. So the price made a double top here again. That is yesterday's top at 107,863, and we reached exactly the same thing here at 9:30. So I was pretty sure that the price would go back up, take those stop losses, and either just go and Bitcoin would just crush faces and go to 110 or something like this, or probably crash again, but I was not sure. For me, I thought like Bitcoin would continue pumping. And on Sol, I was hoping for this 1 hour, like you can see here. I was saying I was waiting for this 1 hour fair value gap. That's another term that I will be explaining in other videos, to be filled, and hopefully buy here and ride along and up to this white line. So there we are. Let's go back. So let's run it. So price went down in this 15-minute fair value gap, went back up, took the equalize, and instead of going all the way up and going to 110 or something like this, price started to do this, crashing. You see on a 5-minute how clear it is. So you see, look at the difference. This is one of the most important part of the video. Look at the difference between all those little shitty candles. Look at that. Look at what the price is doing. Like, there's no strength in this. There's nothing. You could see there's no strength, no impulsivity, nothing. And look at the difference with this during the New York time. That's a lot of volume coming on the sell side during our time that between 10 and 11. That's a lot of volume. You see the difference. That's impulsive. Okay, that's impulsive. That's basically, I'll put it on the 15 minutes so you can see. Even in the 15 minutes, you could see it's impulsive. Now I'm gonna remove this indicator because it's It's actually not that good to keep it on. And not only it's impulsive, because here you could see it was impulsive as well yesterday. That's yesterday's move, and we still had a bit of a breakdown. But the difference here is that we had been making, you could see again, a low, a high, a low, a high, a low, high, low, high, low, high. Sorry, I removed that. And then boom. What happened? We've seen this before. We broke the market structure right here. Okay? Break of structure. So once we've seen that, so I'm going to remove that drawing. It's not that good either. So you can see, so we are at the New York session when a lot of traders are trading, when a lot of volume is coming in. What is going on now? The market has shown its hand. The market is telling us they want the price to go down, because they took the liquidity there. We had the equal highs that we saw in the morning. They forced all the people to get stopped. All the people who had put their stop losses over the allegedly strong resistance that you see in every book. Oh, double top, strong resistance, push your stop losses over it. Doesn't work. Price goes over and collapses powerfully. Price takes the liquidity and collapses powerfully. That's when I realized here. So that's what I was saying. We had a double top, etc., etc. And I was looking at algo, and then I was like, algo is not as interesting now because the equal highs got already taken out. So we could see a reversal. That's what was already worrying me, because there was no move to be made on algo. And Bitcoin was starting to, now Bitcoin is reversing out after stopping the early people that were short. So for the moment, we have to be careful with the alt. I'm watching now how they react, because they are feeling FVG's fair value gaps that I had a look at. So got to the bottom of this white box that I had. And, I did long here, so I did okay on Sol, because we had not taken these three equal highs. So we rushed it, took it. I closed my position around here just before, because Bitcoin was really worrying. So I closed my position just before, and then it went on crashing. So that's why we take profit over those highs. So going back to Bitcoin, that's when I realized really that it was going down, because the market is telling me, listen, I took the liquidity, big traders took the stops, big traders starting to short into the stop losses, and they shorted so much that the price collapsed, during the New York session. What does that mean? They want the price to go down. So it doesn't mean that the price is going down to 30K, right? So it just means that today the price is going down, and or at least in the morning the price is going down. So what do we do when we realize that? So we forget about being long. We forget about anything like buying a retracement, because that's not a retracement. That's very powerful. So now we want to be short. So what do? We get out our 50% retracement. We are getting prepared. That's what I did here. We want to see. So let's put again this. Sorry, I'm letting it play out. I'll stop it, sorry. So here on the left hand side, you could see I was saying I pulled out my fibs. For those that don't understand, I will explain that later. It is just a tool to help you see what is the middle of this move, right? I'm trying to find out what is the middle of this big move down. So that's a 50% retracement, the middle. So the middle is where the green line is. What you want to do is, when you look for a good short, you wait for the price to go back to premium. Remember about equilibrium? Equilibrium is just the middle. You want to know when a price is expensive again, is when it's over 50% of this powerful move. So once the price will be expensive again, we short, because that's what all the big traders will do. That's what the algorithm does. and that's what we want to do. So we're not getting crazy. We're not starting to short over here, and if it had kept on going, well, so be it. But now that the move is over and we saw a little bit of green candles, we want the price to go back here. So we have already identified those big fair value gaps here. That you can see these red. I'll put it here. No, that's not it. Sorry. That's not it either. I'll just remove that. So that's exactly what I was explaining. This was sold. The video is starting to be long, so I'm going to try to explain quickly the end. So the price obviously came back into our area. So I'll try to draw it here again. I'll put it so from the top of the move on the right hand side, I take it from the top of the move to the bottom of the move. Where is the 50%? The middle. The middle is here. So we want to sell when the price goes back over the middle and inside one of these fair value gap. You see these big gaps there, like massive moves, leaving spaces there. Obviously, I don't want to be too long on that because I will have to do a video. But there's one here. I'm on the 5 minutes here, guys. There is another one here. Okay. And not to confuse you, I'm gonna put just this little green line. That green line is the 50%, the middle of this big move. So once the price goes back over, inside this, we want to short. So I shorted basically when the price got right here, closing this box. What happened? Obviously, we don't go too crazy because, you know, Bitcoin, it's trading. Anything can happen. But it's a very high probability trade. So we take it. We put our stop losses over this candle because there's nothing. Price doesn't need to go back here because it has already stopped most people. You could see those people who are short here are the big traders, the big ones. They don't want to stop themselves. So they won't let the price go back up. The algo will not allow that either because he is short as well here. The algorithm runs the market. He pushed the price down, let the price go back up, and then it's on again, ready for the next leg. So I took the short here. Price started to react. It takes some time. Stays a little bit inside the fair value gap. Act like it, pretended to want to go back up. Probably caught a few people who wanted to be long, and started to crash again. And here on this side, you could see I'd published all the entries that were available. Because I'm on a 1 minute, this is a 5 minute, but it's the same. You could see there's a fair value gap here in the 5 minute, this gap here, little gap. Price went back in on this candle and collapsed again. You see? On the 1 minute, it's a bit more detailed. You see, powerful, shitty candles, boom. You see the difference. When the move is powerful and impulsive, you can see the difference. You don't need any indicator, you don't need anything else than just watching price. And when it happens, the time, it happened during the New York session, so it means something. So boom, 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 break of structure again. So you can see I low, boom, market structure is broken. Go back into the fair value gap on a 1 minute, which is here, over the 50% retracement, which is the middle of the move. We short. And we do this again here. Same thing happened. Boom, you see the difference. You don't need any indicator, guys. You could see. Look at those candles on the 1 minute. Go back. Price closes within this gap. We don't have to look at the wicks, but the body of the candle closes here. Boom. So, yeah, I'm just going to put play there. And yeah, eventually price kept on collapsing. Like you saw, the targets are always below the lows. So once, the logic is very simple, we took out the stops, the stop losses, crash the price. What do the big traders want? They want the people that were long, people that bought here, to be stopped as well. So the stop losses will be triggered. They'll be forced to sell, automatic sales. And once the price gets there, we will be able to close our short position, because those people will be selling automatically and we will be buying because we sold here and we need to buy to close our position. So their sales will match our buys, you know, and they'll be forced to do it because their stop losses get triggered. They have no choice. And that's what happens. Slowly, you had another entry here again. Here you can see boom, 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 back into this fair value gap. And no, sorry, that was here. I was getting mixed up here. This actually could have been potentially be seen as an entry, but I don't really like this type of fair value gap. But that's another lesson. You can see that there is only one candle there. Anyway, and then the price started collapsing. You had the last entry here, boom, retracement here, bam, and I was not even home anymore, and I got an alert saying that my take profit here got triggered, so I sold here and I sold here at the targets. Sorry, I bought here and I bought here at the target, closing my positions for a nice profit on Bitcoin. And yeah, so that was it, guys. Just to show you again, it looks like the XRP trade that we made last time. If you want to go back to it and have a look at it again, maybe it was not that well explained and the sound was not that good. So there'll be many other examples like this. So anyway, don't feel like overwhelmed if you don't understand a lot of the concept here. We're gonna cover them after, little by little. But what I was trying to convey here is really that it's possible to know with a lot of high probability where the price wants to go during the day. And not only during the day, but also we can have the same type of analysis to know on the monthly chart where the price wants to go, on the weekly chart, on the daily chart, on the 4-hour chart, anything. So sometimes it looks so obvious and it's so high probability, I would say 95-98% of what the price wants to go, that allows you to make really nice trades and hold them till the targets and get in with pretty nice leverage without risking too much, because the stop loss is very close. So you could be risking, like, I don't know, you could be risking 1 or 2% of your stack and be making 10-20% of your stack. So that's 20 to 1 return on investment. It's crazy. So yeah, that's it, guys. It's already very long. Hopefully it was clear enough. I'm not sure I was clear enough, but I hope so. And any questions, anyway, as usual, you can shoot them in the group and in the comment section. And I'll be trying to respond very quickly in the comment section. So I'll keep it lively, and you guys can always be able to contact me. Take care. Until the next one, guys. That was James Trader.